The Wall Street rally continues. The S&P 500 and the Nasdaq notched 13-month highs as U.S. inflation comes in at 4%, the lowest in over 2 years. The inflation print bolsters hopes of the Fed skipping a hike when it announces its policy decision later tonight. A CNBC survey shows the majority of market participants expect status quo. The Street also expects the Fed to hold fire at least until November this year. Markets in the Asia-Pacific trade largely higher on bullish cues from Wall Street. The SGX Nifty 2 is indicating a higher start for the Indian market. Oil bounces back with Brent crude rising to about $74 a barrel on hopes of higher demand as the Chinese central bank cuts lending rates for the first time in 10 months. The OPEC too maintains its demand forecast for 2023, raising expectations that China may buy more oil. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. Well, those are top headlines. A lot of action in the global markets yet again. The cooling of inflation front in the U.S. and that has had some positive impact on the global markets. So let's take a look at what the Asian markets are doing right now. Largely higher in trade. U.S. markets did really well in yesterday's trading session, and that is something that we are seeing today as well. The Taiwanese index is up 20 points. The Hang Seng is up 26 points. And across the board, there is some green. Nikkei is at a fresh high yet again, 1% higher on the Nikkei as we speak, and that is the case with Straits Times, Shanghai in trade today as well. SGX Nifty, that'll come up for you on the screen, and that one is indicating that the start for our own markets, well, that could be in the green again. 50 points uptick is what the SGX Nifty is indicating right now. Let's talk about the U.S. markets because Wall Street ended Tuesday's trading session higher following the May inflation print and ahead of the Fed's decision, with the Dow Jones surging over 140 points, the S&P up 30 points, and the Nasdaq closing with over 100-point bump up. Let's focus on that closely watched inflation print in the U.S., which hit a 2-year low in May. Inflation rose at an annual rate of 4% and grew by just 0.1% on a month-on-month basis. Meanwhile, core inflation rose by 0.4% on a month-on-month basis and 5.3% from a year ago, suggesting that price pressures they have eased, but consumers remain under pressure. CNBC's Rick Santelli gets us up to speed with all the details.
Well, the May release of the Consumer Price Index had headline month-over-month and headline year-over-year on the tame side. But if you looked at core, whether it was month-over-month or year-over-year, it is definitely on the tight side, on the warm side. Generically, the number was definitely less than last month in terms of the pressure of consumer price inflation. But it's still sticky, and we are coming down the inflation ladder a little bit too slowly for many Fed members. Hence, we are now in the 60% camp of a quarter-point increase for the July meeting, not necessarily any rate increase priced in for the June meeting, and many have said the Fed does not like to surprise markets, and the markets pretty much are set on the notion of no rate increase for the June 14th voting meeting tomorrow. The press conference tomorrow ought to be quite fascinating, though, especially in lieu of the most recent jobs report, which was pretty good, and the most recent CPI report. Tomorrow, of course, we have the cousin to Consumer Price Index in the form of the Producer Price Index. And unlike Consumer Price Index, tomorrow's headline number actually may have a minus sign in front of it, so we want to pay very close attention.
Okay, that is about the inflation print, but to the other big cue from the United States, the 2-day FOMC meeting is underway and the Federal Reserve is expected to announce a decision later tonight. A CNBC survey shows majority of respondents expect a status quo in the June policy. Most of these market participants expect the Fed to hold fire at least until November this year. CNBC's Steve Leisman is here with the highlights from the Fed survey.
You have some surprising results, Joe, from the CNBC Fed survey. It showed our 33 respondents differ with the market and the market pricing in the Fed futures market. They're forecasting the Fed's course is none and done. That is no rate hike now and no more this cycle. I'll show you the top line results here. 91% of the respondents see no rate hike at this meeting. 6% do see a hike. 63% say the Fed won't hike in July either, with 34% forecasting a hike. That differs with the market, where there's like a 70% chance of a July hike. The funds rate peaks at 524. That's a bit higher than the current rate because some respondents do see that July hike. It raises the average. The Fed is then seen on hold at the peak rate for nearly 8 months. Here's how the rest of the year shapes up according to the survey. More than 80% see no change in September and November. 71% forecast no change in December, but a 26% minority, they are penciling in a cut. So all that white is no change on that board. That's how you understand that. Peter Bookvar, Chief Investment Officer at Bleakley Group, writes in, Jay Powell will talk tough at the presser after not hiking rates, but he's done with the rate hikes. Bookvar says credit tightening from the banks and decelerating housing inflation are going to keep the Fed on hold. One factor that could explain this difference between the survey respondents and the markets is concern about bank lending. Take a look here. 53% said they reduced their GDP forecast for this year because of tighter credit standards. 47% did not. The average reduction was 0.3 percentage points. Actually, that's a big number if you're talking about some of the low forecasts that are out there. Still, there are many who think the Fed should keep raising rates.
Okay, Steve, thank you so much. So that's a report filed as far as the Fed survey is concerned. Let's now get you some important reactions to the May CPI print and how that could impact today's Fed decision. Listen in to comments from former Fed Reserve Chairman Alan Blinder, JP Morgan's Joyce Chang, and Yardeni Research's Ed Yardeni.
Good enough to pause. I would view these as, within the second decimal place of what was expected. These expectations aren't always that accurate, but in this case they were. You've got both the headline and the core coming down. The headline coming down fast because of food and energy. That's nice. But the Fed focuses on the core. That's inching down. That's not so nice. They'd like to see it going faster than that. But down is the operative word, the important word.
Well, I'm in the pause camp, but a pause is just a pause. And I think they will signal that their bias is to hike. And even though you've seen inflation come down a tick, you see that something comes down in inflation, energy, but then food prices go up. And so just U.S. core inflation, it's been resilient, it's been sticky. And I think that Jefferson signaled this very well. They're going to pause, really assess where they're at. But I think the bias is for hiking, particularly when you look around the rest of the world, because that's what we've seen other central banks really doing as well, as inflation has remained resilient.
I think the Fed is done. I think they've been promoting the idea that they want to get the Fed funds rate up to a restrictive level and then keep it there. They don't want to push the Fed funds rate up too high, get a recession, then have to force it back down without completely being sure that they brought inflation down. So I think they've been pitching the storyline, which is working out pretty well, that they get to restrictive, and I think 5.25% is restrictive enough as evidenced by the banking crisis. I think they just leave it there through the end of the year. I think the market has been wrong about the notion that the Fed's going to lower interest rates. I think they keep them at 5.25 through the end of the year, and then maybe next year they start to consider lowering it.
Okay, that is about the Fed outcome that is expected as well. But let's slip into a short break now. When we return, we'll tell you how all these overnight global... Welcome back. You're still tuned into Power Breakfast on CNBC TV18. Well, we have our research team joining in with what the trade setup is looking like, the stocks that are likely to be in the news in the action from the F&O space as well. This is our Power Prep segment. Hey guys, a very good morning to all of you. Ekta, let me come across to you. Looks like another good day for our own markets.
Thanks for that. Well, yes, yesterday was a good day of trade ahead of the big Qs. We had the Nifty, which scaled 18,700. The India CPI, the steady global Qs, the lower crude prices really aided sentiment. So for today, the big Q is obviously the US inflation data, which is coming at 4% for the month of May, which is an over 2-year low. The US markets did close higher. We have Asia, which is enthusiastic, and the SGX indicating that we could probably move higher in today's trading session. Now, all eyes eyes will be on the Fed possibly skipping that rate hike. The street is now probably anticipating a 90% chance that the Fed will not hike rates tomorrow. And remember that the Fed has implemented 10 consecutive rate hikes over the past 14 odd months. Rates are already at around 5% plus and at the highest level in 16 years. So yes, how long the pause stays, that's something that the street would watch out for. But as of now, there are permutations and combinations in terms of what the Fed could do in the coming months, and maybe there could be a pause all the way up till November as well. But a lot of this is going to depend on the commentary as well as the inflation data in the coming months. Now, in terms of our markets, broader markets have outperformed. Mid-cap index at a record high. Mid-cap index was up 1.2% yesterday. Week to date, it's up close to 2 odd percent. Small cap index has also rallied around 1.5% on a week to date basis. So that seems to be one pocket of the market that is going to see continued interest. Flows, FII's net bought after 2 consecutive days of selling, so that's positive 1,677 odd crores. DII's net sold 203 crores.
Okay, all right. Thank you, Ekta. So that is the market setup for today, but a lot of stocks that will be in focus as well. Vivek has that list. Vivek.
Well, good morning. Quite a few stocks to keep on your radar. First on our list, Tata Chemicals. What we understand is that the company has further gone ahead and downward revised its prices as far as soda ash is concerned, and this time around the cut has been quite significant at 2,200 rupees a ton. Also keep an eye out for Zydus Life Sciences. Some positive news flow coming in over here. The US FDA inspection of the company's injectables manufacturing facility at Ahmedabad has got a clean sheet from the US FDA. At the end of the inspection, there were nil observations that were seen as far as the US FDA is concerned. So some positive news flow for Zydus Life. Anupam Rasayan is another stock to keep on your radar. The company has gone ahead and signed a letter of intent worth almost 2,186 crore rupees. Now, this is with the Japanese specialty chemical companies. Important to note that this is for a supply of a patented life science active ingredient product, and the supply is expected to start in calendar year 2025. Lastly, yesterday we saw a large block as far as capacity infra is concerned. 4.7% equity was sold. So the seller was Newquest Asia Investments. They sold almost 32 lakh shares at 190 rupees a share. Amongst the buyers, one large buyer was Societe Generale, picking up almost 24.1 lakh shares.
Okay, all right. Thank you so much, Vivek, for joining in with those stocks. Let me finally go across to Nigel, joining in with all the cues from the F&O space this morning. Nigel.
Well, morning, Sonal. Yesterday it was Tuesday, and we said the Nifty Financial Services Index will be most crucial. And you pull up the Nifty Financial Services Index, and there is a bit of an overlap with the Nifty Bank. Both of them moved to the high point of the day. So there was an expiry-related phenomena that played out yesterday, as we've been seeing on Tuesdays. What happened on the Nifty in terms of open interest? There was some shedding. And if you look at it, the open interest has been coming down, telling you going into this Fed event, the open interest is on the lighter side. The Nifty futures as well, you did have the premium that came down to around 60 points in comparison to around 80 points odd. But there was no actually short positioning that was added. There were some longs that were added, close on 4,000 long contracts. The shorts, in fact, got covered by close on 2,000 contracts odd. And now the FIs, they're net long on the index with their positioning at around 51%. Let's look at the options data. The 18,700 put, well, that's open interest now has gone to more than 1 crore shares. Yesterday as well, it added close to 45 lakh shares. And between the 18,700, 18,650 put, they added more than 85 lakh shares out there. On the upside, those call writers, they were feeling confident that we got the higher levels protected. Now, in the last few days, there is big shedding that we're seeing out there. Case in point being the 18,700 call. Just take a look at that. 50 lakh shares getting shed in a single trading session. So the bears, they are a little bit wary now about this up move that we're seeing. What are the levels you're looking at? Yet again, going by the SGX Nifty opening, we're going to be running into the resistance zone from where we have seen a bit of a U-turn in the last week itself. But support, that comes in at around 18,580. I say this because of the writing we have seen at 18,600 put. And also going by the writing we've seen at 18,700 put, you need to keep an eye out on the 18,650. So those are the levels you're looking at. The Nifty Bank, that needs to come to the party. The Nifty needs just to go up by nearly around 150 points. But the Nifty Bank needs to get to its fresh all-time highs, which is at around 44,500. Those are the support levels up for you on the screen. SGX Nifty suggests green. Don't buy the gap up. Look to buy the intraday dip. Back to you.
Okay, all right. Nigel, Vivek and Ekta, thank you so much for joining us and prepping us up for this trading day ahead. Let's slip into a break now. Up next, we'll get you all the cues from the commodities market. Stay tuned for that. Welcome back. You're watching Power Breakfast here on CNBC TV18. It's time to talk about commodities, and a lot of action has been happening there. We got the US inflation print as well. Manisha Gupta is joining us with all the updates there. Hey, Manisha, good morning.
Morning, Sonal. Thank you for that. Well, yes, U.S. inflation slowing in the month of May to 4%, and core coming in line at 5.3% clearly has been a big support, as markets are now betting even higher than the U.S. Fed will not move interest rates today evening. The other thing is that China finally coming out with a stimulus. Short-term lending rates for the first time in 10 months have been lowered, and the street clearly seems to be rejoicing that. Remember, crude oil prices fell 4% Monday, but yesterday they gained up by 3.5%. So we are back around the kind of levels that we started this week on. But that is the case for other commodities also. Copper, for one, really seems to be celebrating this. We are trading at a 1-month highs right now. It was in the end of May that we hit a 6-month lows as well. But the last couple of weeks clearly have been positive for copper also. What is not doing though well is the gold prices. We have seen prices extended 3 days of losses. The Fed meeting is today, and the street is looking out for guidance for the month of July, which could see an interest rate hike with inflation still on the slightly on the higher side. So barring the safe haven, gold and silver, industrial commodities like crude, energy, base metal prices are all trading in the positive right now.
Okay, all right. So some positive cues in the commodity markets. Thank you, Manisha, for joining us with your take here. Let's stay with the oil market then. Goldman Sachs cut their forecast for Brent crude for the third time in the last 6 months, revising their outlook to $86 a barrel this time. Let's listen to Jeffrey Curry, the global head of commodities research at Goldman Sachs, on what prompted this revision.
Why did we cut our near-term price targets? It's the policy response to the high prices from last year, and it's threefold. One, you had the SPR. And they're still taking barrels out of the SPR and don't start really putting them back in until next month. Two, you have the monetary response to the inflationary pressures. That's creating a massive amount of destocking. And the biggest one right now is a more discerning approach towards sanctioned oil. In fact, the core of this downgrade was driven by a 600,000 barrel per day upgrade to sanctioned oil.
Okay, that is about commodities and outlook on crude oil prices. Let's move on to some weather updates now. Gujarat and Mumbai, they are on high alert ahead of Cyclone Biparjoy's expected landfall tomorrow. As preventive measure, 20,000 people were moved to safety from low-lying areas on the Gujarat coastline yesterday. Chief Minister Bhupendra Baghel also held hotline conversations with district collectors of vulnerable areas to take stock of the situation. Meanwhile, the Met Department has issued wind warning along the coast of Saurashtra and Kutch today, as very heavy rainfall is expected in isolated places over Kutch, Devbhoomi, Dwarka and Jamnagar as well. Okay, let's do one thing. Let's listen in to Jonathan Feiner, who is the Deputy National Security Advisor at the White House, as he speaks on India-US relations and the priorities the both countries hold together.
First, our major defense partnership. So our two countries consult regularly to assess regional developments and put in place an architecture to cooperate more closely through joint exercises, information sharing, logistics networks, and interoperable communication systems. We continue to strengthen India's status as major defense partner through defense industrial cooperation that co-develops and co-produces important military capabilities for both of our countries. The United States and India share a common vision to decarbonize our economies and deploy clean energy, which is obviously reflected in both of our countries' 2030 targets for climate action and clean energy. No country's clean energy transition will be more consequential to the world than India's. Our strategic technology partnership. I know you're all aware of our path-breaking initiative on critical and emerging technologies, or ICET. We like acronyms, which we inaugurated in this very room just under 5 months ago, and which is already catalyzing government, business, and university cooperation in defense, space, semiconductors, advanced telecommunications, biotechnology, and emerging technologies like AI and quantum to foster an open, accessible, and secure technology ecosystem. This technology ecosystem in areas such as Open RAN and 5G will offer other countries, beyond just the U.S. and India, advanced communications alternatives that are consistent with our shared democratic values, a case each of us is making with our partners around the world.
Okay, let's move on. In a bureaucratic reshuffle, the government has appointed Chanchal Kumar, the Managing Director at the National Highways and Infrastructure Development Corporation, as the new Secretary of Civil Aviation. Pankaj Agrawal, Additional Secretary at the Defence Ministry, has been appointed as the Power Secretary. Sudhansh Pant, who was at the Shipping and Ports Ministry, has been appointed as the Health Secretary. Special Defence Secretary Nivedita Shukla Verma has been given charge of chemicals and petrochemicals, while Additional Secretary of Economic Affairs Rajat Kumar Mishra has been appointed as the Fertilizer Secretary. Additionally, Subhash Chandra Lal Das, the Director General of Hydrocarbons, has now been given the post of MSME Secretary. Okay, all right. With that, we'll take your leave on this edition of Power Breakfast. Stay tuned. Bazaar Morning Call comes up next.